Good afternoon and happy Thursday, everyone. We have about, 37 minutes before we kick this off with Nic Chahine. So stick around, get out your pen and paper, and get ready to learn because this should be an awesome session. I will see you in about 37 minutes. Hey there, everybody. Hope you are all having a great Thursday. And my name is Jonathan. If we haven't talked before, I've done a few of these webinars in the past with Nic Chahine, and he'll be joining us here in the next 5 minutes or so. But right now, I want you to post a 1 in the chat if you already trade with Nic Chahine. Give me a 1 in the chat if you already trade with Nic. Give me a 2 if you don't. That way we'll know who already follows, some of those trades, some of that research, and who doesn't. So 1 if you already trade with Nic, 2 if you don't. Welcome. I see Greg, James, Gerald, Karen, Matthew, Muhammad, Warren in the attendee list here, as well as a few people on YouTube as well. So let me know. What are you trading? Did you trade NEO today? I know I took a trade on NEO, sold that credit put spread. Ellis is a 2. Glad to have you here, Ellis. Shinka is a 2. Okay, cool. Well, that's great. That's fantastic. If you haven't already traded with Nic, that you're going to learn a lot today, hopefully. And today's session is titled The Insider Secrets to Increase Your Income by 150% Using a Systemized Options Trading Strategy. That's a lot of words, and it sounds super exclusive, but hopefully what you'll get out of today's session is a clear system or a clear framework by which you can more consistently win and then feel more confident in the trades that you're making. So Nic has a clear system that he uses, and hopefully you'll learn some of that today. Stick around until later, and we will have a special gift for everyone here who is attending. And if no matter what, if you stick around today, you will learn something new about how to make money more consistently with your trades. So with that being said, it looks like we do have Nic in the house here. So welcome, Nic. Glad to have you here.
Hey.
Hey, how are you, sir?
I have COVID.
Oh man, you're a warrior, man. You're still here.
But yesterday was the bad day. Today I'm 1,000% better.
Okay. Yeah, I remember. It's been like a year and a half since I had COVID, but I got just that first day feels like you got hit by a truck.
Yeah. Yesterday I thought I was wondering if I had it, but it felt like a regular flu. Today I took the test, and anyway, I took it twice, so there'll be no concerns. Anyway, so today was kind of a surprising day in the market, right? But not really. Sunday kind of had an idea, laid out the plan for us for all week. And part of it was Thursday we might be weak because everybody wants to offload going into the weekend because everybody is scared about next week. So I thought they would jump the gun and do it Thursday. And so today was bad. That doesn't mean tomorrow is going to be great, but tomorrow we might pop in relief that whatever report is going to come out in the morning is not as bad as people think. And don't chase the pop. Use it to fix whatever problems you had today. So that is my PSA announcement for today. I take it Yellen is talking. She's blabbing about something right now. So I see a lot of headlines coming across. I don't know if it was right now or earlier. I just grabbed my phone. I don't watch news. So I see them come across on Twitter. So I was like, nope.
Right.
So I see a lot of
I've got Benzinga Pro open here, and sure enough, yeah, you can see that she is talking talking about whether or not a recession is coming and which direction gasoline prices will go. So
yeah, not down. You want gasoline prices to go down, you're gonna have to produce your own stinking oil. Period. Right. End of story. So before I forget, I'm gonna post my social media stuff. So follow me on social media if you don't already. You can reach me there that way. This way you can stay in in contact. So what are we doing today? We are going to go over the very basic things that are absolutely necessary to make your trading a lot better. And I'm going to share with you what we do and how we can maybe help you and convince you to join the group. The short story is the group is doing well enough that I have 300 people, had 300 people today in a room live, me sharing my screens all day. In fact, before the day started. And so that happened today. I'm going to have to move my mouse over to here. So and these are people that are lucky enough that they can give me their time during the day to come join. So this is a live room that's going on all day. It will be part of whoever's in my chat room, which is different. Okay, so I'm going back into what we provide, and then you'll see if you can fit within that. So live room open all day, and then somebody that cannot make it there, they have access to the chat room, which is, yeah, that's the live room right there. The chat room is a static discussion board, basically. Think Discord, think Slack. It is, so basically it's just where you can just, if you have a question, you pop in. In fact, somebody just had a question for me in there, something about triple witching. So you'll see he popped in, home plate. He was in the live room. A question about triple witching. So if you have a work job or you don't have the time to join me in the live room, you have access, two-way communication in the chat room, and I answer whenever I see it. So if it comes in at night, I answer at night. If it comes in the morning, so it's not like I have working hours, then I don't touch it. Yeah. So over the weekend, we're working a lot. So, but the whole thing started is in 2011, I got together with Benzinga, and I've been working with them since. We started with let me show you my trades in credit spreads, and then added the chat room, and that was so good. And then I recently added the live room, which is so good. So many layers to many different types of traders, new traders, experienced traders, options traders, non-options traders, futures traders. We have it all. And they shared their entries and exits in the live room. But if you're not that person, then all you need to do is check the message in the morning. I share the day preview. And then in the middle of the day, I share a write-up as to kind of like, here's what's going on today, and here's what I can trade. And these setups are made for somebody who cannot be babysitting trades. And the trades that I like, which are the ones that I'm talking about now, usually have weeks on the clock. So they're usually 3 to 4 weeks out. I don't have to baby them if I didn't want to. So they're not, fast paced. I do have fast paced trades shared throughout the day, many of them. So that opportunity is there. But I don't want to scare away the people that are normal traders, who are more investors than traders, that they have a commitment somewhere else. They have kids, they have jobs, right, and they just need something extra. So we got you covered. So it's a wide net we cast, and it works. I mean, everybody is happy. Everybody's getting their answers for the questions they have. The types of trades are variant. So if somebody does not do options, we can work with that. If somebody does options, but their account doesn't allow them to sell spreads, and we work with that. In fact, this week, I introduced them to a couple new ways of trading that worked out well. And we also help manage your trades. Like let's say you cannot be in the live room, but you will make an exception because you have a trade that you need a question answered right away. You pop in the live room. Why? Because I would be sharing my screen. If you want me, I can take my screen. I can take over the screen.
Well, if I can just reiterate, I'll let you take over in just a second. So just to reiterate what Nick is saying here, I just want to show him what it looks like on the user side. We're going to get into the actual strategy stuff here. So, but in terms of everything he just said, the first thing he said is, where do you find that live link in the mornings? It's right here on Benzinga Pro. with the options mentorship chat. And then right here it says live session, and you click on that to get to the live session that I'm in. It's not sharing his charts. Because he's here instead of there. So he'll show you that in a minute, but that's where you can trade live with him all day. He's calling out day trades as well as discussing the swing trades that he posts on the weekends and throughout the week. You have the charts open and available, the analysis on the overall indices every morning. And then if I scroll down here in the chat, we have the update midday for specific trades. Like we had NEO, we had REGN, we had the E-minis. So you're giving updates on all of those. So that's what he's talking about midday there. You have all of that within this chat, as well as there is a live chat in the live video trading room as well. So just keep that in mind. We'll get back to this product stuff later on in the session. But as we're talking through the strategies today, this is how you can actually trade with Nic, follow along with Nic day in and day out. Oh, and one last thing, we didn't really talk about the weekend charting sessions.
Yeah,
But if I scroll back here to
I will.
Okay. Basically, it's a 2 to 2.5 hour charting session every weekend.
Yeah.
With a Google sheet of all of the stocks that are covered.
That alone is probably 4 to 6 hours worth of work for me between Saturday, actually more, 5 to 6.5 hours between Saturday and Sunday to produce it and then deliver it. I take hundreds of tickers and I do the homework that you're looking at right now. I tabulate it, I make it a clickable link, and I'll give my answers. I put them alphabetically, and I break them up into 2 or 3 videos, and I share it live, and it takes about 2.5 hours to go through. So a lot of homework. I don't know how you put a dollar amount to that. I can tell you one thing, it wouldn't be the dollar amount you're going to be offered today. That would be a month if I was in charge, but that is not my company. So right. I work well with Benzinga. They bring the audience, and then if you don't like it, they'll give you your money back. I would be shocked if you don't find value. And I would be even more shocked if you're not a better trader coming out of this. If you join us, you will become a better trader. I'm going to show you testimony from the live room. And this is just snippets. And I take dozens of these. I mean, I have so many of these that I can't fudge it, is what I'm saying. It's too many to fudge. Can I take the screen over?
Yep.
Okay. Trying to find it. There it is. You don't want to share the wrong screen. Not that I have anything to hide. Okay. So see, I have my Pro up as well. I'm a blank canvas. If you don't know anything about Pro, I don't have time to mess around with things. I like one that says kitchen sink, boom, and click that. I get everything in one. But unusual options activity, everybody wants that to work for them. It's part of what we do, and we have so many eyeballs looking for it. All right, so these are just a few things. This is what it would look like in the live room. Hundreds of people in here. At this point in time, it was almost 300. Today, we broke 300, and that's not our high. And Alice had a super tight problem today, concern, and she asked, she even turned on her audio. Usually, I'm the only one talking, and I'm sharing my screen like you're watching now. And then this thank you was good enough for me to take a picture of it. He was done in the beginning of he's not even coming back tomorrow. He said he did well enough, great weekend, I'm off, and they're done. So that was pretty nice, first thing in the morning. So anyway, the homework is all over the place. This is one of the sheets. That's the most recent sheet, and it is 146 tickers. And if somebody wanted to look at a stock, and they can just click on it, and then it comes up. All the comments are right here. Some trade setups are right here. It's a lot of work. So what are we going to do today? We are going to, I'm going to share another screen, and I'm going to do a small presentation to remind us of things that you should be doing going forward, regardless of what you do after here. And it is a habit that I don't think you can shortcut. And I'm going to have to switch screens. I wish they would have an easy way to switch. Where the fudge is Zoom? Oh. There we go. Share. All right. So you're looking at, I call this my getting to know pro habits, even though you have a job, but there's no need, there's no reason why you can't trade like somebody whose livelihood depends on this. So there are a few things you can't shortcut. First, you need a method. So most people that trade on their own just wing it, and they don't know that they're winging it. With a method comes confidence, and the method, you have to test it, and you know what works, then you become confident, and you need the discipline to repeat the method. Otherwise, you could have the best plans, and if you don't stick to them, you're going to not have an advantage for having a plan. Might as well wing it. So let's start with defining risk. I'm going to give you a few seconds to think about, if you were throwing a class about risk, how would you define it? How would you verbalize it? Do you say this or that? I'll give you a few seconds, and I can guarantee most of you, if not all, know what to say, and you, but not in the right way. So you all will say it's how much can I lose? The size, the consequence. Yes, that's correct. Risk size, but that's not the part you manage. Everybody says, I'm managing risk. I know how much I'm losing. No, that is not the part you manage. That is a decision you make, and you say, okay, I found an appropriate size risk. I will take it. So I accept the maximum size risk, right? But that's not the part you manage. That's the part you manage. The odds of success. Risk size is one thing. What are my chances of winning or losing? That's the part you manage. The only reason you take a risk is because you think you're going to win, right? Otherwise, that would be stupid. So you give yourself odds. I think I'm going to win because of, let's say you give yourself an advantage over to your opponent, the person taking the other side of your trade. If you're buying stock, there's somebody selling you stock. So you think you're going to win because you did homework, and you have reason 1, 2, and 3 that tell you that you're right, they're wrong. So that's your odds. And then things happen, you learn new things, time passes, and you say to yourself, you know what? I lost that advantage. So suddenly you degrade yourself, you demote yourself. You say, my odds have dropped. And that's the part you manage. If your odds dropped below your acceptable level, you close the trade. Not because the trade got too big of a loss. You accepted the loss. That's not the decision factor. The decision factor is, am I going to win or not? What are the odds? If that goes below your level, that's the part you manage. So risk management is that part, not the size. Okay. Now there is a fine line there. It's something that is now, it's not always the case, but now is the case. So this part is manageable to a degree. What do I mean? Let's say today the stock market is down 2%, and let's say you think it's a bottom, but you're not very sure. Fictitious example, of course. And you want to catch the falling knife, which means go long in a stock that's falling. You take half position. So you manage your entry size. So you say my usual risk is 10 whatever, shares, calls, whatever, or $1,000. My usual risk is $1,000. Because I am unsure, I'm only going to risk 500. So you accept 1,000, but you only deploy half of it, 500. So that leaves 500 in your pocket. And if price goes like this, then you can average into a full-size position. Averaging down, if you took the 1,000 right away, right here, and then you added more lower, that is a mistake. Don't average down. I don't know one professional trader that does that, because all you're doing is doubling your problem. You had a problem, you just made it bigger. Not a good idea. But if you break up your entry into 2 different smaller pieces, okay, you averaged your price down without increasing risk. So that would be the smarter thing to do. All right, having said, I wanted to clarify that. Okay, so all right, what's next? These bullet points, by the way, they're super simple. So you can take a sticky note and write them down. You don't need to copy or download or anything. First, define risk, break it into the 2 little pieces. How much do I want to make my risk? and what are my odds of success. You need to manage that part. Okay. Now, there are no shortcuts. I mentioned homework, and the only way you can leave very little to chance if you do a lot of homework. And I do a crap ton of homework for you. You don't have to do any homework. On the long weekend, I said, you don't even need to be here on Sunday. I will record the session without you being here and I'll send it to you. So I did the homework. I worked all weekend that weekend. And then you set alerts. I do that. My inbox is full of alerts. On big down days like this, I get a million alerts. Beep, 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 beep. It's like a Christmas tree. I set the alerts. And then when they go off, I'll go see if I have a reason. What is NTNT? That's an acronym I made up. In fact, I didn't make up. I may have stolen it from somebody 10 years ago. I don't know. I'm going to claim it as mine. So it is no trigger, no trade, or no thesis, no trade. Basically, it says, if I don't have a specific reason to be in a position, I shouldn't take that position. So if you feel like you need to buy a call in a stock, just the feeling, you shouldn't do it. You should find out a real reason. And you thinking it was going to go up, I thought it was going to go up. That's not a reason. Why did you think it was going to go up? Did you think because they had an event, or they're going to report something, or the sales going to be, or you saw a line out the door if you're close to the factory or something? I don't know. So don't take a position without having a specific reason for it. All right. So that's how we get into trade. You do homework, you set all the alerts, and then you pounce. But if you don't have the alert, which is the reason, you don't pounce. And the reason doesn't have to be technical. It could be fundamental. It could be lying on the chart. Like I had 2 or 3 pop up today. Start looking for longs. I can't remember the tickers. I want to say Amazon is one. It says, start looking for longs. So I go in there and I start looking for longs, and I reset more alerts based on what I find out. Or I may take a trade. I don't know. So we'll see. And once the trades are set, then what do? You have to manage them. So that's the second part of the risk definition. That's where it kicks in. Managing the odds of success. And it's enough with options. It's very easy because you can pick it up off of the options chain, and I'll show you in a little bit. It's what they call delta. That's your odds maker. When I go through options and I teach options, I don't speak Greek. That is the only Greek word I say, delta, because I don't have a replacement for it. But I don't insist on it. It's basically, what are the odds of success? And you manage that realistically. And you also need to have an exit strategy. Okay. What does that mean? If things go well, you need to put in mind, where do I exit? Where do I book the profit? And if things go bad, where do I call it quits? How much pain am I willing to take? I should know this stuff before I even get into the trade, or as soon as I get into the trade. All right. So basically, you do a lot of homework, you set your alerts, and then you get the reason to get into the NTNT, the reason. And maybe it's appropriate, maybe it's not. Once you set your trade, then you have to manage your odds of success. And you also have to know how you exit. So now we've gone through the cycle. What can we do next? We need to restate a bunch of things many times to hammer the point home. So there are some do's and don'ts, right? So the do's is have balance. I'll give you an example. Let's say I was long Facebook today, and then the market fell, and I saw that Twitter fell, and I wanted to go along Twitter. I'm already long Facebook. Why would I add the same type of trade, a social media company? Have balance. Like if I'm long this, if I'm long everything, why not take a small put spread or small bearish position in the S&P for the next 3 weeks? Create some balance. If I'm short a whole bunch of stocks, why don't I take a bullish position in the indices? Balance it out. That's one important point. Why would we want to do that? If you followed the mantra of Cathie Wood in two years ago, you're in a world of hurt right now because they all move the same way. On any given day, all of the stocks that they bought rise and fall the same way. So you have great days and you have horrific days. You have no normal days. And And when something goes bad, it goes bad for everything. That is not good. Today, I had a few longs, but I also had a few shorts. So I had an okay day. The shorts, I was short Oxy, short Exxon. They're both doing great. I was long Facebook. That fell, but I was also short Facebook short term. So I own a call for Facebook out to July. I sold some calls against it for this week. Those calls are dying in my favor. And I'm going to repeat the process for next week. So, but I am long term, short term. So I have some sort of a balance. Spread the risk when you can. If you know options, you know what that means, but you can also apply it differently. Spread the risk. Remember, the first rule of risk is how much? And I said, break it in half, spread the entry. I don't take all of it right here. Take some here, some later, hopefully not lower, but later. Okay. I did that with crypto and I shared it and it's working right. So don't concentrate all your risk. Don't go all in at the same time. Average in. We already beat that to death. That's why I told you we're going to repeat the same things. All right. So common problem sources, which are the don'ts. Don't average down, please. I know it's counterintuitive. Oh, I DCA it. If you say DCA, which is dollar cost averaging, if you say it often enough that you need an acronym for it, I think you're doing it wrong. But that's my opinion. And don't hope. If a trade is going bad, somebody came today and says, I have a trade set up. It looks like it could work today or not. What do I do with it? I said, well, if you just want more time to be right and expires today, that means it goes sour 100%. I would just move it out to tomorrow, give you another day. And hopefully they did, because things got worse into the close. Redefine the trade whenever you need to. What does that mean? If I had a trade that was set up properly and then suddenly things went against me and now the trade is very bearish, it's very red, I should say. So I should redefine it as this is a trade that went bad. I'm no longer trying to make money. I'm trying to get out with as little damage as possible. So the don't hope part, let me put some real life example to it. So let's say you invested $1,000 in a trade, whatever it is, calls, puts, shares, whatever. Now let's go with calls. Let's say because most people buy calls. If you bought calls and they cost $1,000 and now they're down to 500, and you're saying, gosh, I still believe in the trade, but it's running out of time, and where they're set right now, they are no longer viable. In other words, it's going to take a miracle within that period of time for that to happen. I wish I had more time. So what do? I take the 500, I save the whatever's left over, the 500, and I reopen the trade out in time, lower to give it more realistic odds of success, but smaller in size in terms of how many contracts, because I only want to redeploy 500. I don't want to make it bigger. So I saved 500 and I put that 500 somewhere else where it can succeed. And you're saying it doesn't make me a lot of money, right? Because that trade is broken. I'm just trying to get out and get back my money. So a small rally would get me halfway through the pain and maybe I get out then. It's become a hostile trade. I'm no longer trying to make money. I just want to get out of it for minimal damage, right? Okay. So I do have something that I'm using these days, and it's an acronym. It's ABCs, even though it's listed CBAs. Like, let's say today was a down day. And let's say today is, I was saying to myself, oh my gosh, I wish I had insurance. I wish I had puts. I wish I had VIX calls or whatever. And let's say tomorrow the market rallies, opens up and goes bonkers, and you don't do anything. You were just wishing, I wish I had protection. And then the market rallies, you don't add protection. So here's what I would do. I would add protection if I needed it. And I would book profits faster. Like if I bought calls at the close thinking we're going to pop open, I would book those at the open if we pop open, at the risk of leaving a whole bunch of money on the table. That doesn't matter. I would force myself to book profits early. I would also force myself to close broken trades. Let's say I have a trade that I bought this morning and then it fell apart and then it expires tomorrow, and tomorrow we're going to get a pop. and that trade fixes itself to where it's almost back to even. Out I go. So I close profits earlier, and I close losers if they get a relief rally. I don't hope that it's going to work out. All right. So let me put the whole thing on one piece of paper. How can you level up your game just from what you heard here today and never see me ever again? I hope not, but how can you do it? Adopt the NTNT, no trigger, no trade, or no thesis, no trade. Same thing. That T can be interchangeable. So please don't ever take a trade that you cannot justify and explain. I'm taking this trade because ... How do you, well, because if the ... goes away, you should be out of that trade. Why are you in this trade? Why are you still here? I took it for the earnings. Well, the earnings were last week. Why are you still in the trade? I thought it would recover. No, you took a bet on the trade, on the earnings. It didn't work out. Close it. Okay. And manage the odds. Be realistic about your odds. Again, you can refer to it in the options table. I'll try to show you an example here. Manage the odds of success. That's what it is. And in options, it's the column called delta. And I'll show you how to use it. And have an exit strategy when you go into the trade. Decide immediately. So futures traders, when they enter their positions, I think they do it the best way. So they have their system, everybody's different, and they say, oh, that trade is for me. So they enter here. They say the order has, get me in here. Here's my price. Stop me out if I take this much pain. But if I get my run, half out here, trail the other half based on this and get me out there. So their order has, if things go bad, automatically stop me out. If things go well, stop me out here, stop me out there. So they have an exit strategy. Everybody should do that to a degree. Everybody should do that. And I don't mean that you need to learn how to do it mechanically. It's not that important. At least put alerts. Like if I have a trade that it is on and it's significant, I want to manage it, I put alerts to tell me, oh, things are going against you, buddy. You might want to pay attention to it. So have an exit strategy and grow. What do I mean? Adopt new tools, not too many tools. Specialize in the tools you use. Like if you've been looking at the MACD and you've never used it to make a trade, get it off your screen. Why are you still using it? I'm using it as an example. It could be anything. I have very few tools, but I'm adding to them. And I've added a couple. I think I'm going to ditch one, but the one I keep is bulletproof. So I'm adding tools. Never stop learning. I learned new things this year. And collaborate if you can. How do we do that? You join a group. Like my live group is insanely strong. People in there are sharing and they're so accurate. I'll show you in a little bit the comments. Some people are so accurate at levels that I had to leave because I'm dealing with Corona things and I had to go do some things. And I came back and they're all helping each other out. Yesterday, I jumped on a show for Benzinga during the session, and somebody else took over the reins, and they help each other out. So don't trade alone. There's no need. If not my group, find a group that suits you. The reason why I like my group is because it's not like Discord. There's not people popping in. Nobody's allowed to book a profit unless they actually told us the entry point. Like they can't say, hey, I shorted Amazon this morning and I'm booking my profit now. Well, did you post it this morning? No, then you shouldn't post the fact that you're booking your profit right now. What good does that do me except feel jealous about it, right? So it's like etiquette, and nobody does it, rarely. So it works. For example, today, a couple of people said, I'm buying puts on this pop. When we get there, I'm buying puts. When we drop here, I'm buying calls. When we do this, I'm buying puts. Perfect. Everybody's helping. So join a group that can do that. You say you're busy and you can't do it all day, every day, fine. But if you can pop in, why not? Even if once a week, 2 hours a week, an hour a day, 20 minutes a day, it doesn't matter. So this is like these are things that level up your game, right? And it's not rocket science. You're listening to it and you go, oh my God, I knew all this stuff, right? But do you do it? That's the question. Do you do it? It's very tempting to take shortcuts, and it's very damaging potentially to take shortcuts. So establish a system and stick to it. My system starts with a whole bunch of homework, and I'm talking hours and hours of homework. I'm going to show you an example. Earlier this week, or maybe last week, I don't remember, I drew this this chart for Amazon. I have proof, it's in there, where I drew this for Amazon. I didn't have a clue that that was going to happen to the penny. Look at how Amazon followed my thing. And I'm a fan of Amazon like nobody's business. And everybody was chasing the breakout, the split. I said, if not long already, why are you getting it's splitting? Yes, but that doesn't change the business. Oh, everybody's going to buy. Okay, whatever. So I said, this is what I see. And I put an arrow. I said, beware that the bounce is going to face sellers. And what happens when it fades? If they lose footing, they're going to come down. I said it has support, but it's not bulletproof. It has much better support. And look where it's at today in the box that I drew at the bottom of it. Do I go all in? No. Look at the weaknesses here and here. Why? Because the market is absolutely stupid. These rallies, they don't learn. Out of the pandemic summer, they did this on a bigger scale. Why are you rallying a company 28%? On nothing new to its business? The only thing different is that the stock is going to split. So anyway, so it does have a little bit of, it does have a lot of support, but it has no hard line in the sand. There's an open gaping hole here and one here. Those are weak points in the chart. So technically they may have already fulfilled the target, but another down day or two, that's fine. So I'm going to put an alert for myself here to start looking. And then one down here. Okay. So we're doing homework as we speak. And then the alerts fire off. I had many alerts fire off today, and now I have to go clean them up. All right. So this is Amazon, just as an example. I have homework here. They were lined up. These are ready. This one was ready. I've traded these already. They're in play. And we take it one ticker at a time. So I wanted to also show you something. Let me see if I can remember. Oh, testimonials. All right. So this one, the one that was done for the weekend, but that wasn't it. Okay. So this actually happened today as well. I wish I can make it bigger. Oh, I can. Yay. So this is somebody. Hey, Wolf, I just outed you. Reached out in a private message. Cypher is another guy in here who is super good with levels. I trust his levels. I've known him for years. So he said, I just got thanking him because he helped him make money because he gave bulletproof levels early in the day. So that's how smooth the room runs. And that's today. Look, 295 people. That happened today. I think another one happened the other day, 280 people. What was that all about? Okay. So that was another person looking out for somebody else. So the JBL, who's pretty active now, Ryan is pretty active. And then he's talking to Ryan. If you're in here today, you might want to monitor your MULN calls. Somehow JBL remembered that Ryan mentioned the stock calls, and he's giving them the heads up on that. I mean, where does that happen? I have, I don't know, 50 of these screenshots from months of talking, and most of them that I didn't show here are about, I just booked profit. The easiest 20, yesterday I had one that says this was the easiest 20% I made on my money ever using a stupid little debit call spread late in the, debit call spread late in the day. So it's an active day. It's a fun day when you're doing it with 300 people. The ideas are flowing. The eyeballs are everywhere. We have all styles. We have aggressive bearish people, aggressive bullish people, and it all works. Nobody's antagonistic. We had a comedian today pop in and make us laugh. I don't know if they knew they were on speakerphone or not, but I don't know what they said, and it was totally funny. So anyway, it's a great environment. to try to hone your skills, look out for potholes, come up with ideas, share ideas. I would love that. And avoid mistakes. So at this point, I will take a couple of tickers to see if we can run through the cycle. Let me see, where is my chat room?
And on the YouTube chat, that maybe there'd be some tickers that would associate with the overall market. Basically, Kareem was saying, do you think the market already priced in inflation numbers for tomorrow? And then a different person says, do you think that the CPI value will be bad or good tomorrow?
Okay. So I don't think tomorrow is a CPI number. It is inflation, but I don't think it is the CPI, whatever it is. So I had to, I'm laughing because, okay, part of the service on Sunday night, other than everything I already mentioned, on Sunday night, I do a 10-minute video, 8 to 10-minute video strategy. In it, I said, we're going to have a bad Thursday. That was Sunday. Okay, Sunday night. I said, I bet Thursday will be weak. And I bet, of course, this is bet. I'm guessing. I don't know. I'm guessing. So that first guess was correct. The second guess was, I bet we pop in relief after the report tomorrow, whatever the fudge it says. And why? Because what is the inflation report going to tell you? Tell me that you don't know already. What is the inflation report going to tell you that you don't know today? Think about it. See if you can come up with an answer. I'm curious. There's nothing the report can tell me that I don't know today. You have inflation. Yes, we knew that. What else can you tell me? Nothing. You have inflation. Okay. Doesn't change what's built in. So the fact that inflation report, whatever it is, passes, people are going to breathe a sigh of relief. Now, if it comes out extremely off the expected levels, then it might be a more emotional response to it. But it doesn't change the fact that it's saying we have high inflation. That's what it's saying. But we knew that. So if we pop tomorrow, don't chase it, because that's a relief rally. It wasn't bad. It fades. So don't chase it. So what do? If you need protection for next week, you can buy a debit put spread. You can lighten up on some of the longs you have. You can book profits if you bought calls at the close today. If you bought shares at the close today for a trade, I would book them in the morning. And why? Because they're going to have another scary moment into next week. Next week is a heavy expiration week, near record according to Goldman Sachs. And it's a Fed week. What? So it's going to be edgy. So we might dip before Wednesday, and I bet you anything we will rally after Wednesday or Wednesday afternoon, because we want the event to pass, the Fed event. So why wouldn't we fall after the event? What is he going to say worse than he's already said? He's already said, I'm going to raise 0.5 point now. So there's no mystery there. Nobody's expecting no cut. And he said that he's going to raise another 0.5 point next time. So there's no mystery in that either. He also said he's going to have 6 months worth of quantitative tightening in the sense of balance sheet runoff or whatever. So they're lightening up their whatever the assets they own on a balance sheet. So he's already told us everything bearish for 6 months. What's he going to say? Hey, it's working so well, I wanted to commit to destroying it for a whole year. He's not going to say that. If anything, he's going to back off a little bit with his rhetoric. Have you noticed how Jamie Dimon and a couple of other high-profile people are coming out and freaking people out? Yellen today saying whatever the hell she's saying. They're flapping their lips, trying to freak people out. They're saying, oh my gosh, we have this and we have that and disaster this. The only reason why the Fed is trying to destroy the economy is because it is too strong. That is not a bad scenario, but the Fed is trying to talk it down with the words. Apple will be fine if we raise rates 2 times. Apple would not be fine. People investing in Apple stock will be scared out of their mind when they hear the FOMC chairman keep talking crap about the economy. I'm going to crush the economy. If he doesn't shut up about it, I'm going to be scared. But Apple is not going to die if you raise rates 2 times. Really? So the rhetoric is what's scaring people out of the stocks. The rate hikes are not killing the companies. In fact, I don't think he can control inflation with what he's doing. I think this inflation is different. We've never had this much money in the economy. That's why everybody's so confused. We have like $5 trillion in the economy. Now, I give this quiz every time I can. Do you know how much it takes, how long it takes to run through $1 trillion if you spend $1 million a day? If you spend $1 million a day, I'm just trying to tell you how big of a number this trillion is. I can't believe we stopped talking billions. We went to T's immediately. It takes 2,740 years for you to run through $1 trillion if you spend $1 million a day. That is a lot of money. We have like 5 to 10 of those floating around in the economy. Well, it's going to take a long time to burn off that kind of inflation excess. And inflation was created by the government. So they don't have anybody to blame but themselves. And they're punishing us for it by crushing our economy. They don't need to crush us, but they can with their words. So next week, if there's a dip, I will buy it, anticipating a rally out of the Fed. Now, will I invest my entire nest egg in it? Absolutely not. No way. This will be a small bet on the reaction, but at least I'll be ready to chase with a smarter bet, which would be less of a bet, more of a trade. I don't want to anticipate, like tomorrow's pop is a hunch, so I wouldn't lay big money on it. But tomorrow at the open, I would have information, then I can set a trade with conviction. You get the difference? I don't want to guess. I want to trade information, but every once in a while, it's fun to guess. And the fact that I guessed from last Sunday that Thursday will be tough, I'm okay guessing another thing, which was Friday we would pop. So we'll see. Give me a ticker. Did we already say that?
Jessica and Anthony are both talking about the Qs. Anthony says Qs 300 level. And Jessica again said Nifty 50.
300 level. Okay, so let's go with this one on the Qs. So everything you see here is hand drawn. I don't have a lot of tools. I do use one for harmonics, those blue and red things, because I don't know enough to be, or nor can I draw them on the fly like that. So that's one of the tools I picked up last year, and I enjoy it. So the first thing I do is I want to zoom out to get the big picture. Right. Look, let me set something straight. This is a monthly chart of the QQQ. This is a bullish chart. The bulls are in charge. If you consider, a long period of time, then you drill down to a weekly chart. It's not so obvious anymore, but the bulls are still in charge. Why? You had a rally from here to here, and you're giving up half of it. That is normal price action. Now, what feels weird about it is that it's an abnormal rally. Why? We had a freaking pandemic, and then we had record money from the government, helicopter money. So the rally was weird. The drawdown was weird, but it's normal relative to the rally. So the price action, totally understandable, totally normal. Everybody's saying, oh my gosh, this environment is so tough to invest. No, I mean, tough to trade. No, it's tough to invest in it. It's easier to trade in it because it's just obeying the trading rules very well, but to an nth degree. So it makes it tricky. So on the weekly, the bulls are still in charge. But if I go to a daily, okay, so now it's clearly is a bear market on the day. The bears have the advantage on the day chart. What do I mean? Rally, sold, rally, sold, rally, sold, rally, sold, rally, sold. So they're selling rallies. That's why they're having lower highs and lower lows. And as long as that continues, I shouldn't assume that's going to be different until I see evidence. So what is the evidence? The evidence is when you see them, they stop making lower lows. I'll draw it up. They stop making lower lows. And I went through this today live because the stock market did this at the end of the day. Every pop, I said, don't chase it. Every pop is there to grab you. Every pop, grab more buyers, more buyers, more buyers, and everybody lost. So when you stop making lows, step one. and then you start making higher lows. Step two, lower highs are fine. They'll come to a point where they come to blows and you beat the level of failure. And then you pop above it and you come down. And then you beat the level of failure. And then you pop above it and come down. And before you know it, now you have an ascending tiny trend that offsets this descending trend. So you need to see breach of prior failure levels. Like this looks like an important level. So specifically, the 300 mark, I don't know if that's important, but it's a mental thing. So they're going to pivot around it. So now I would contend that this is an important mark and this is. So let's go see what these are. $315 and $280. So put that on your calendar, $315, $280. If you breach 315 on the upside, you breathe a sigh of relief if you're a bull. If you lose this one, it means the bears are in complete control. Rally sold, rally sold, rally sold, rally sold until you hit a bottom. What is a bottom? A place where everybody says, no, okay, this is stupid. I'm getting in. And guess what? We haven't even reached the pandemic breakout level. This is pre-COVID. COVID recovered it, went to the freaking moon. What? Listen to this. Apple is still 40% above this. Apple still is 40%. Amazon fell into it. Facebook into it. PayPal below it. PayPal is below this point. How is that possible? CRM fell inside, maybe even lower than the low. The small caps, the IWM, the RUT, which is a basket of 2,000 stocks, they fell to that. The SPY, nope. The QQQ, nope. The SPY is still quite a bit, I think 12%. Here's the SPY today. So the S&P is 15% pre-COVID level. And that was a crazy level. So if you go to here, yeah, so we have plenty of places to fall. If we lose 380, we're going to 325. You can take that to the bank. So I am optimistic, but I'm also a trader. So I will follow the trades. So anyway, that was the QQQ answer. Long-winded answer, but that's a complete answer. Now, if you're an active trader, we can talk about trading it 5 minutes at a time. And there's no clues here. When it fell apart, if you look left, you closed stupid gap. You closed it, had a little jaunt of support. Stupid rally. Easy come, easy go. There's no truer statement here. Anyway, that's cues. What was the other one?
So, I mean, what I think is important here, Nick, like there's lots of people that want to cover tickers, right? And you're a master technician. So, and you're
Cool.
basically doing homework for people all the time. So the main question that I think is in the minds of a lot of people who are intermediate or beginners is what makes your style of trading different compared to the next guy, like in the way that you actually structure your trades.
Okay.
Like when we're talking about those levels, right? Everybody and their grandmother talks about levels,
Yeah.
if they're a real trader. But then how do you turn that into a systemized strategy of like, okay, we know that 280 and 315 are key levels. What happened? How do I structure a trade when
Okay.
it breaks one of those levels to protect my downside and statistically be more likely to win?
Okay. So when I take a position in size with conviction, I usually am bulletproof about a few things. Number one, the company. I don't take hardcore positions in companies I don't trust. Like if you tell me go trade Lucid, I will trade Lucid, but I wouldn't dig my heels into anything where it involves me having to own shares forever. I'm not that guy. So if you tell me in Amazon, I would be that guy. If you tell me in Tesla, I would be that guy because they have a P&L, not because I don't like Lucid cars. They make great cars, but the company doesn't have a P&L yet. What would I be buying? I have no idea. So Amazon, I'm going to use a ridiculous example here. So I will bring the picture here once I'm fighting. I should have logged into a trading platform here, but I forgot. Again, I blame COVID. I'm going to use that. Okay, so Amazon. Do you love Amazon here? Right.
And I think you're still showing INTC.
Right. I know.
Okay.
But I'm going to bring the Amazon table into here.
Perfect.
Just as it doesn't matter. I didn't log into an options platform here, so I'm going to copy paste.
Okay.
So I'm just trying to find a trade here that would make a point. 1 second. My bad. So everybody loves Amazon. Everybody loved Amazon. Today it's down 5%. I wonder if they stepped in to buy it, right? This is an options chain. Okay, so this is Amazon, trust me. And you have weeks and weeks and weeks and weeks. I chose August. I went to August, and the current price is somewhere around here. And this side, if you know anything about options, this side, everything is puts. This side, everything is calls. Not that you need to know what they mean. I'll illustrate what I would do. So if I'm catching a falling knife, like Amazon fell 5% today, inside of a falling market knife where we don't know where the S&P is going to bottom, if you twist my arm and say trade Amazon, like I mean, I like the company, but it can't rally if the markets are falling. And if I think the market is going to fall another 10 to 15%, I don't want to trade anything. So we can set trades that leave room for that arrow. For example, let's say I wanted to own shares of Amazon right here, right now. If you go out and buy 100 shares of Amazon, you're going to have to pay 100 times $115 per share, whatever it is right now, $116 per share. Or you can collect money to promise to buy it lower. So there's somebody today that would have paid you $400 if you promised to buy their shares at 105. So there's that 15% and then some buffer that I need. So what does that mean? It means I'm long Amazon in spirit. Why? I committed I would buy them. So I'm essentially long. If somebody says, here's my share at $105, but I collected $400 for it, a little bit more. So I break even close to 100. What does that mean? I may wake up one day owning shares at 100, 105, but I collected for almost 500 to be there. So I have buffer. I break even at 100. And that would be me getting long Amazon today with no money out of pocket and leaving plenty of room for error. That's exactly what it means. If I sell this put, now this is not a recommendation for you to go sell puts. But if I wanted to own shares at 116, I would love to own them lower, right? So I'm taking a less risk and I'm getting paid for it. So when you buy shares, you spend the money, you're out the money, you start losing right away if the stock falls. So let's take the worst case scenario. The worst case scenario for you who bought shares, you bought them at 116, Amazon falls to 100. You're down, I'm going to round it, 16%. Okay. And I, on the same day, instead of buying shares, I sold the $100 put. Okay. So you spent $100, 100 shares times $116. I collected $440 credit. The stock fell to 100, you say. You lost 16% or whatever the hell that is. And what do I lose? On paper, this position loses a lot, but I don't want to book the loss. So what do I do? Nothing. I wait for them to give me the shares. I said I'd buy your shares. Give me the shares or go away. That's what it is. So they either don't assign you shares and you keep the 400, or if you book your loss, if you buy the put back, you booked your loss. And that's what I wouldn't do. I would sell a put because I want the shares. And I would tell them, give me the shares. So you wake up owning 100 shares per contract you sold. And that position that had showed down 1,000% disappears. You didn't realize, you didn't panic buy the put back. The put disappears and it takes the losses with it. And what's left is the $440 you collected to open the trade. So your break-even point is closer to 100. So you who bought the shares is down minus a whole bunch. Me, I'm not even starting to lose until if I keep my share and Amazon continues to fall. I start losing below 100 if I keep my shares. But if I get assigned and I'm broken even and the market is collapsing, I sell my shares right away. So
really quick, everybody who's watching this, throw a number 3 into the chat if you understand what Nick's talking about. But if you understand that he's talking about selling what's called a cash covered put, and if it goes down to the strike price, you would potentially purchase that the shares would just end up in your account, and they would take the money out of your account to purchase those shares instead of paying for it right now. Someone else pays you to promise to buy their
right.
shares at a
So
lower price.
exactly. So options are contracts. So let's back into a story about options. But the bottom line is my trade is bullish and leaves this much room for error and requires no money out of pocket. And the only way I can lose is if price does this. If the stock rallies, I make money. If the stock doesn't rally, I make money. If the stock falls a little bit, I make money. If the stock falls a lot, I could lose money. It's not even a guarantee. Only one scenario blows me out. So basically, to say it, which is easier? To try to guess where the stock is going to be, like, hey, do you think Amazon's going to be at blah, blah, blah by blah, blah, blah? I don't know, but it's easier for me to say, I don't think Amazon will be under 100 in the next 40 days. If I can say that in the next 70 days, if I can say that, then I can put that actual statement into money. I don't think Amazon is going to be under 100 in the next 71 days. So I sell the 100 put, I collect $300. I put those words into action. I didn't pick these, I picked these because, so earlier I mentioned that there's something that in the options will tell us the odds of success. This is the column. It's called delta. And look, at current price, 116-ish, everything is 0.5 on both sides. There's another one here, it's 0.5. So you have 50% chance. The further down you go, what are the odds Amazon will be at 105 by 71 days? Pretty low, not 0.5, not 50%, half of half. So about 25% chance it'll be there. What are the odds of Amazon will be at 94? Maybe 15%, maybe. And if I keep going down, the number will be like 0.01. So basically saying there is very little chance Amazon will be at 94 in 71 days. That's what that says. So you got your odds maker right there. Okay. So it's a good way to take a bullish position or bearish. You can do the opposite side over there. And leave room for error. You don't have to be surgical. That's the beauty about it. All right, so let's back into a little mini lesson about options. So they are contracts. They come in two flavors. We have puts, which is this side, and we have calls, which is that side. And the puts are basically insurance. If you want to think about it, that's the simplest way. First of all, I don't need to own shares to do anything on the options chain. I can buy and sell any of these. I don't need to own shares. And puts are not bearish and calls are not bullish. Both are both. It depends what you do with them. So if I'm buying a put to protect my shares, let's say I own 100 Amazon shares and I'm worried about the next 6 months and I want just on 70 days and I just want to provide some protection, I can buy the $110 put. It would cost me $600 and that covers my shares. So if Amazon goes to zero, I'm guaranteed a sale at 110. So I can sell my shares at 110. Somebody gave me that promise. So I'm not bearish. If I was bearish, I would sell my shares. I wouldn't spend $600 to keep them. So buying a put is not bearish from that perspective, right? So you're saying, what about the other person? They're selling the put. Yes, they want my shares. So they're not bearish. They just want them cheaper. And so they're not bearish either. So they're somewhat bullish because they want to buy the shares. So like I wouldn't do this in Lucid. I keep going back to Lucid because it's a very popular stock, but I don't want it. So I wouldn't sell a put in it because I don't want it. And the car is great. Tech is great. I just don't want the shares. So I wouldn't sell a put in it, but I would do it in Amazon. So protection and the seller of protection. Now, the only way a put is bearish is if I go out and buy a put and I don't own shares. The only way I can make money is if price falls and I can make a lot of money. So somebody that bought puts yesterday, the stock was down 4 or 5% today, 4%. The people that bought puts yesterday, even way out in 71 days, they made 30% on their money. So that's the put side. So there are contracts that come in put versions and in call versions, and they have stipulations. So the first one is days, right? How long is the contract for? In this case, it's 71. I could have chosen one that expires tomorrow, or a week after that, or 2 weeks after that, or next month, or next year, or 2024. So I choose the term, the number of days. That's a parameter. Price, I can choose the level. That's a parameter. Everything here is 100 shares. That's a parameter. So if I buy a call, I'm playing with 100 shares. If I buy a call, I own the right to buy 100 shares. If I buy a put, I own the right to sell 100 shares at an agreed price. Okay, so parameters. Now the calls are another way I can get into a stock. Let's say you wanted to be long Amazon, and like the other person that sold the put, you don't want to commit the whole money right now. You're skeptic about the future, the short-term future. So what do? You can buy a call, which costs a fraction of what you would have to do to spend all the money to buy the shares, and it locks you in. So if I buy a 116 call, I would be guaranteed a purchase at 116 throughout the period of time. So if I go out to December and I buy a 115 call, I'm guaranteed a purchase of 115. Why would I want to do that? Because if the stock rallies, you can buy it backwards. So you buy it at 115 because you're guaranteed that purchase. Somebody committed who sold you that put, the call. They committed that they would deliver shares to you. Hopefully they own them. Otherwise, they're going to have to go cover their short and they lose a lot of money. So buying a call affords you the right to buy shares at a level that you choose. So, buying a put affords you the right to sell shares at a level that you choose. So these are contracts. There's a buyer side and there's a seller side. Okay. So what I'd like to do is know which contracts are not likely to get into play and sell some of those. So if you've heard anything about options, is that most options expire worthless, right? So my goal was immediately to start selling them. Tell me which ones I can sell, because if most of them expire worthless, I do not want to be a buyer of them at all. Now, every once in a while I do buy them, but I prefer to sell them. And I sell them around predictable periods of time. Like I wouldn't sell options into an earnings report. It would have to be an unbelievable exception. Why? Because I don't know the report quality. I don't know what the expectations are. It's emotional. You're saying, "Oh, you're such a chicken." Well, if you're thinking, most people think the report is going to be good, strong. They're going to have good guidance. It doesn't freaking matter. I'll prove it to you. Apple has had one positive reaction out of 7 reports. And I can guarantee you they did not have 6 shitty reports. So it is not a driver of price on the event. The quality of the report is not. Apple's reports are impeccable, yet they've only mustered one positive reaction out of 7 tries. The last 7 quarters were red reaction, one positive one. And so it's not the quality. And 2 out of the last 2 Robinhood reactions were positive, and they were crappy reports. So it is definitely not the quality of the reports, it's the expectations. And I'll give you this tidbit. Netflix, the reaction was horrific, right? In all good reason. The CEO came out and trashed its own company. He said, "Oh my God, we sucked." And they delivered a shrinkage where people expected growth, and that hasn't happened in years, if ever. And here's the kicker. That's the tradable part. He scared the metics out of everybody going forward. He said it's gonna be much worse next time. Okay. So next time, if it comes out bad, but not, I mean, people were now are like, they have some sort of a disaster in their head. If it just comes out bad, just as bad as last time, I bet you it rallies, and it rallies big. So I will take a lottery ticket trade on earnings for Netflix, and I underscore lottery ticket, meaning it's not going to be big position. It's just going to be something fun, because I really don't know. I'm guessing. So it's all about expectations. How the hell did we get there? That was a big tangent. Oh, okay. So the way we trade is with information, and I like to leave room for error. So when I share a setup for somebody that's at home, has a job, they can't be in a chat room, it usually is via video, 10-15 minute video, explaining the macroeconomic conditions, the stock I'm doing, what kind of fundamentals it has, what kind of technicals it has, and why I'm doing it now, and what would get me out. Like, I recently shared a trade with Intel. I said Intel gets no respect. It's bigger than that AMD and NVIDIA combined twice over, but it gets no respect. It hasn't been in the 30s since 2017, I think. I said, I'm willing to take a risk on it that the support will hold. And if it doesn't, my trade is going to be in trouble. And I already said, I'm not going to defend it. So that scenario where I would wake up owning shares, that might happen to me with Intel. But guess what? My break even would be like 35. So I'll take that. So if I go to Intel, clear the decks. So the worst case scenario is for me to be long Intel at 35, breaking even. So that's price from 2017. So I'm okay with that. That's a calculated risk. If Intel is much lower than that, then the stock market have crashed. So we're down 20-30% or something like that. So the decision wouldn't have been a mistake. It was just been the circumstances that got us there. And even then, I said, every trade I send out now is with the caveat, say, don't do anything all in, because the VIX is 25, people, for a reason. It's been this high, I think, longer than I've ever seen it before. Average used to be 18, 19. I can't remember what it was. And now it's been consistently over 20 and sometimes at 30 for a long period of time. So there's a lot of uncertainty. The experts don't know what the hell's going on. The leaders are confused. The experts are confused. So everybody's hedging hedges and hedges on the hedges of the hedges. So all these liquidity providers are having a hard time keeping up. Okay, so I made this market. So how can I hedge that? Oh, I got to do this. Oh, no, that's big now. What do? Now I got to do this to fix that. I do. It is a mess. So all you can do is just make sure that your risks are finite and you're taking tactical trades. There's no need to build huge investments right now. Right now, it has to be tactical. I take this trade for this purpose. Let me see.
I just got to say this really quick, because I feel like some people still aren't getting the fact that you don't actually have to be right on the direction to make money.
Yeah.
Like, do you guys realize how game changing this is? That, yeah, you can take small risks on lottery trades. Like, yeah, you can still have some fun trading, but the fact that you can sell a put or a put spread, which I want to cover before you have to leave, Nick, for the people that don't have large accounts. You can risk less than like $500 or less than $200.
I'll share that example with you this week. So yeah, you're right. So what does it do? The way I trade, it removes the need to be surgically accurate. So if you know options and you nail an entry point by buying something, you can make a ton of money, but you can lose a ton of money pretty quickly. The way I trade it, it becomes less of a home run, but who's going to poo-poo 20%, right? So I'll give you an example. The SPX, the ticker for the index of the S&P, now expires every day. There's a contract that expires every day. So this week we sold spreads that expired, that worked perfectly. So Monday, the market, whatever. I'll go back to yesterday because I remember the sequence. Yesterday, the market opened down. So I sold a put spread, which was a position that had left a lot of room for error. I forgot the level at which I sold it, 4070 or whatever. And then the market rallied. And when it rallied, I sold the exact opposite position on top. So I took a bullish position at the open, after the open. I took a bearish position and I didn't nail the timing down somewhere up there. And then all I needed is time to expire. And the yield was 20%, like 18 or 20%. And that was started and finished in the same day. I'm not saying everybody should do that. That illustrates the style. When you see something happening to a degree where it's like, okay, it's falling, I get it. It might not be a bottom, but I can see a bottom. You can put a trade in motion that even leaves room beyond that. I'll give you an example with NEO. So yesterday, the group came, hey, NEO's reporting before the open. What's your guess? So I looked at the open interest and I told them the guess. And I said, down is better. And I gave numbers and it's exactly what I said. So I took a bullish trade on NEO today because somebody asked me, what would you do with that? I was like, well, I don't want to catch it down 7% because I don't know how far down it's going to go, but it looks like it put in a bottom here. So I said, let's trade that. NEO just told us, hey, I have a bottom right here. So I said, I'm willing to take a risk at $15. So it's at almost 19. So I would sell a put. I will take a position at $15. That could yield me 14 or 15% if I'm right. Meanwhile, I'm leaving a lot of room for error. After a bad day, I'm leaving almost 20% room for error after a bad day. So that is a trade that says, you're a chicken. Yes, that's fine. But I don't want to be a hero because I don't know why it should rally tomorrow. And if I buy a call, and it doesn't rally tomorrow, it has another bad day, I may be forced to stop out because if I buy calls willy-nilly, I might be down 30% in one day and I'll be out. So as opposed to, having to defend the position at $15, that's easier. So yes, you don't have to be surgically accurate. And this was real life. And who else reported last night? Because they came to me with two guesses on earnings and I was right on both. And today I was right on the second one. Docu, did they fall after hours? Oof, 22%. Holy crap. Yes. So they came to me and they said, what do you see in the options? I said, the data is somewhat murky, but I would not buy calls because down is easier. Sure enough, but I didn't see it down that much. But I did say, whatever you do, don't buy anything, neither calls or puts in this week's expiration because they are priced more than twice what they should be. So if you buy it, even if you guess correctly, you're going to lose a lot of money just from the stock opening. Everything is going to get a haircut tomorrow at the open. Everything, calls and puts, they're going to be a lot cheaper just from the opening tick. And you don't want to lose that. You're just giving away money. And the solution was me sharing a video a few weeks ago, actually 3 videos on how to do that. How do you take advantage of discrepancy in pricing? I'll give you an example. When Roku reported, I did it. They said, how would you trade it? I was like, I don't invest in earnings, but if you want to guess, here's a trade that I would put. And I suggested it was a call calendar, not diagonal. Call calendar. So I said the current implied volatility, the options for this current week when it's reporting was huge. So everything was priced double than it should be. And then the ones out in time are not. So I said, if it was me, I would go out 2 weeks, buy my guess. So if you guess up, buy a call. If you guess down, buy a put. So I said I would buy a call. And then I would sell a call for current week. That makes it makes a calendar or a diagonal. So at the open, and the cost was 60 cents per contract. So if I did one, it was $60. And at the open, they both lost. The call I bought didn't make money, but I doubled my money. The premium of the thing I bought it was $1.25 the next day, $1.30, $1.27. So how did that happen? Because the one I sold lost twice as fast, and it expires in that same week. So because I took advantage of that differential and implied volatility, so I said Docu was setting up that way. So if somebody did that with Docu, they could they would improve their odds of success. So I didn't even need to be right. I just needed to play the implied volatility, and I repeated the same thing with Zillow, only on the put side. It also worked. And another company, which I'm drawing a blank, maybe a firm, I'm not certain, like a week after that on earnings, same deal. When you see a big difference, it's not always correct. When you see a big difference between the options pricing for the current week versus 2 weeks out, how can you tell? You look at the implied volatility. There's a column in options called implied volatility. They call it IV, implied volatility. It's like the VIX for that particular contract. And if you see it 300%, and you go out 2 weeks, and the one out 2 weeks is like 100, that's a big difference. The next day after the report, that 300% will drop to like 160 or 150. The other one will drop a little bit, not much. So if you buy something during the week, you're going to lose your money just at the open, just from the opening tick. Oh, it opened. That's it. So these are pieces of information that we discuss all day. These are little things that you need to know to get better at trading options. I don't think anybody should invest without knowing how to trade options. I'll give you an example. If you own stocks, you're leaving money on the table. You can sell covered calls all day long, all month long, all year long. I can't convince my brother to do it. He should. When you own a lot of stock, especially high ticket stocks, there's so much money left on the table. But if you cannot fathom the opportunity, the idea of you having to sell your shares, then that's not for you. But I think everybody can live with that. And even then, there are some things you can do about it. But there are no shortcuts. Options are dangerous in the sense where they give you great results if you get it right, but they also give you bad outcomes if you get it wrong. So what do? You don't take willy-nilly positions. The biggest danger is you take a little bite here, a little position there, a little bit, and then before you know it, your account is depleted. Like, what the hell happened? Well, you bought this, and you bought this, and you bought this, and you bought this. And what do they say about options? The most options expire worthless. Well, you were a buyer of every option. How about you sell a few? So you increase your odds of making money here and there. Let the other buyer lose. So here's my idea. Let me find suckers that are super bearish so I can sell them a put spread that wins in my favor. Let me find suckers who are super bullish so I can sell them credit call spreads so they can lose money. So I would like to be in the business of selling losing lottery tickets for people. How do you do that? You just do a little bit of homework and you find areas where you can say comfortably, there is no way this stock is going up there or down here in this period of time. Of course, there's no such thing as there is no way, but that's the concept. If it was risk-free, they wouldn't give you money for it. So it is not rocket science. It's repetitive, it's boring, but it's consistent and it plays out well.
Thank you, Nic. That you fit in a nice little mini lesson on implied volatility there. I know you're fighting a sickness, so thank you for being here already for an hour and a half. Before Nic hops off of here, I just want to emphasize that you don't have to have a large account to
yeah, that's the point you wanted to make. I forgot to mention that those trades I'm saying. So the SPX trade, for example, you have the opportunity to make $100 or lose 400. So all you need is enough to cover $400 worth of margin. Now, of course, it's easier to make money with a larger account, but when you do a spread, the platform is happy with you because you're taking a finite risk. The worst case scenario is calculable, and they don't have to go and say margin requirements or whatever. In options, the word margin is not the same as with stocks. You're not borrowing anything against anything. So what happens is if you have $5,000 in your account and you take a trade that risks 400, they just reserve 400. cash secured is what the term you mentioned earlier. So they say, okay, you do have 5,000, but you don't really, because we need 400 to cover that maximum worst case scenario if it happens to happen. When the trade is dead in your favor, or when you decide to buy it back, they'll release whatever is left over of that margin. And it's not like you're borrowing, it's your own money. They just carve out a little, some of it, and you can't touch it. It's there, but you just can't touch it. It's not available to trade. So you can do this stuff with a tiny account. But here's the kicker. Even if you don't have enough money to invest right now, you want to learn first, right? Like I fight for a sport. I didn't jump in the ring and learn on the fly. I would be dead. The people I fight are monsters. So I learned hit the bag, proper jabs, proper slips, proper uppercuts, proper kicks, proper checks. And then you spar, light spar with friends. And then you spar heavy with friends. And then you spar with strangers. And then if you want to compete, you compete. So you have to learn before you spend your real money. I don't get it. People get in and they start, where's the trade? They take 20 contracts. Whoa, what? Get in, listen, learn. There's a lifetime of investing. Practice with fake money over and over. Now you establish that you can do it. Do one contract over and over. Now you establish that you can do it with real money, because emotionally it's different when it's not real money. And then when you get comfortable, you can increase the size. There's plenty of time. You jump in this environment, you're going to get hurt. So I'm just saying, baby steps. I would love to have you in there. And I'm going to give you 2 guarantees. Again, I know I said them before. 1, I guarantee you will find value in there. If not, I failed to point it out. But the bigger guarantee is that I can guarantee you'll become a better version trader of yourself and learn a few new tricks that are game changers, simple concept that you can apply all the time. And that is a guarantee I can deliver. And if not, Benzinga will give you your money back. And that is a guarantee. I know they do deliver whenever you need it.
I did the thing where I lost Zoom.
Yeah, I mean, yeah,
I started sharing my screen and it went on my third monitor.
That's the thing. Zoom, people that make Zoom, can you just let it sit where it is? I mean, you make a change and suddenly the commands go over here. No, wait, they're up there. Where the hell is it? You wiggle the mouse. Where is that thing?
So today, what we've talked about are the importance of technical analysis. You can use technical analysis to see where the price action is most likely to go. We talked about delta, how delta is the odds maker on option contracts, and it's a clear number that you can look at on an options chain.
Yeah.
And so if you are part of Nic's program, you have someone with decades of trading experience that is literally doing the homework for you so that you can skip to a video like this, a spreadsheet like this, and get this. It's good to get all of the practice in of going through all of these charts if you have time. But I know there's some of you out there that work full-time jobs like me, and you're like, man, there's no way I can do all this homework. Skip to the ones that Nic put a potential structured trade on. That doesn't mean you don't do your homework. Still do your homework, but that way you could cover like 20 of these instead of 144.
And a lot of the trades I write up is because of questions that come from people. Like if it was me trading my own account and nobody else's, not helping anyone, I would have like a watch list of like 12 tickers. That's it. My watch list right now is thousands because I have to keep everybody else's stuff going. So your suggestions, the questions that come from the members are gold. I think yesterday's trade setup and today's trade setup was me answering questions like, you know what? I don't mind this. I'm going to do this for myself. So listen, the fact that I love these webinars because they sell the product that I most am passionate about, the one-on-one engagement. The bottom line is I made myself available to you 24/7 every day. One level or another. You get my writings twice a day. You have access to me in the chat room all the time. You'll probably get my email because it's there somewhere. I guarantee it. So, and you have a live room where you have me on a mic helping you with the trades intraday. That part is so much fun. It's unbelievable. So there, I don't know what else to do. Backflips. I don't know how to do backflips. I don't do backflips. I will try, but I will break myself. At my age, I will break myself.
So just the point is, you can do your homework on the weekends. There's a video recording, so you can go over that even throughout the week if you just want to get your practice in. Nic is available in his live video streaming chat room 9 hours a day, so you could pop in there on your lunch break or trade all day with him as he's calling out day trades. And if you're not sitting in front of a computer screen all day, you can hop in here and just take advantage of the swing trades, these very high probability, low stress swing trades that, like right here, he made one on Visa. This was from earlier this week, I think. Yeah, 3 days ago. So you can see here, he's sharing a very detailed video with two separate setups there and how to execute credit spreads. So Rolando, I know you're newer to selling credit spreads, or some other people in the chat. Um, this is exactly how you can do that, and we have a whole library of videos that can get you up to speed on how to execute those trades. And then every day, this will kind of be your home base where you log into this chat and you have the link right here to Nic's live session. And then every single morning, Nic gives you the support and resistance levels on key index ETFs, as well as the futures. So you can just get your bearings as the day is starting and then dive into any trades that you're setting up for the day, or just looking at your alerts that you created for yourself on the weekend. So I'm going to stick around here. It looks like some people are in the chat here. James says, thanks, Nic. Your knowledge and dedication are inspiring. Oh, yeah, that's you talking about Tesla. Do you want to look at Tesla before we hop off?
No, I can speak to it. I don't have to look at it because I looked at it just before I hopped on here. So today Tesla acted well. First of all, the score was half the score of the whole market. Plus, it held until that freaky drop at the end of the day. And it has several levels of support below current price. So I shared two trades on Tesla yesterday. One expires tomorrow, and it's going to expire for maximum gains most likely. And the other one expires next week, or the week thereafter, also will expire for maximum gains. So I wouldn't short Tesla. The easiest way to trade Tesla, and you will rarely lose on it, buy the dips. That's it. All you have to do is just overcome your mental need to short Tesla and buy the dips in Tesla. And I'm not a Tesla fan. I promise you, you couldn't pay me to drive a Tesla, and I don't like Elon Musk. So, but I'm a big fan of what they do. And just buy the dip in the stock that has shown the most strength under incredible conditions. What that stock survived is unbelievable. I thought they would go bankrupt a long time ago, and so did a lot of people. And right now it is impressive what they deliver: 12-13 billion dollars in cash from operations. What? Okay, so that is a good company. Just buy the dip, short Ford if you want to, and GM at 26. So anyway, so yeah, Tesla is fine. Don't worry about it. It will move with the market. It cannot rally alone. It has good influence on the S&P. So if you're long or short the S&P intraday and you're worried about the move, you have to track Tesla. It infects the S&P. It's not mathematically the heaviest in there. I think Apple and Microsoft are, but it has a pretty strong influence on the S&P intraday. So pay attention to that. Thanks for the good warm wishes. I wish nobody gets the COVID, but at least my body looks like it's used to it, because I'm kicking this one pretty quickly.
Awesome. Yeah. You got some serious endurance there, Nic. So thank you. Thanks again for being here. We'll see you in the chat room.
Yep.
And then just for everybody who is in here, make sure you use that link, because if you join Nic's chat room today with Benzinga Pro access as well, you get a free laptop and 50% off.
Nice.
So normally this would cost about $3,400 for the year.
And if you
which
don't need a laptop, donate it to some kid that can't afford one that goes to school.
Absolutely. And so, I mean, it costs less than like a semester of university, like college books.
I can't, the price, I don't want to know how much it is, but there's no way on the planet it's worth what I'm trying to deliver. It is just no way on the planet. It's like a year-long classroom at your convenience, Your Highness. You want to learn, you pop in, you say, teach me. And I teach you, and then you disappear. Teach me again. Whatever you taught me, I didn't pay attention. Fine, we'll do it again. Anyway, I gotta go.
All
Thanks.
right.
Thanks for the hosting.
Thanks again, Nick. Have a great night.
Yep. Where
All
is
right,
the
everyone.
button? Where's the button? Good.
All right, everyone. That was Nic Chahine, the options expert here at Benzinga Pro. And I hope you all got a lot out of today's session. So just to review what we covered today and what's included with the options mentorship program with Nick is technical analysis is important. And you have Nick's technical analysis with a 2 to 2.5 hour charting session every single weekend. So you get as much practice as you could possibly want on the weekends, even if you're a part-time trader. Then you can set up those alerts, do your homework for the rest of the week, and then just check in maybe 15 to 30 minutes a day on those trade setups. Then he's also giving you daily alerts in the chat room here on Benzinga Pro for additional trade alerts. So maybe the price action breaks through one of those support or resistance levels. He's going to give you a buy alert or a sell alert right here within this main chat room here where it says Benzinga Options Mentorship. And you can see that he's also giving you updates on key support and resistance levels there throughout the day. So you have your homework that he does for you. All you have to do is review it and learn how to do that for yourself on your charting system on Benzinga Pro. He's giving you those swing trade alerts. And then you can also access his live trading session every single day, whether you're trading with him all day or if you just want to pop in on a lunch break to ask him some questions. Live session right here. You click into that link and it'll look like this, except that you'll see Nick's charts throughout the day and you'll hear his voice speaking to you just like you had on today's session. So, I mean, I don't know what else to say, honestly, other than this has revolutionized my trading patterns and how I can limit my risk and learn how to, predict the likelihood of making money on a trade. And keep in mind that you don't have to have all that cash available for selling cash covered put. You don't have to be able to buy 100 shares of Tesla or 100 shares of Ford. You can just do a credit put spread so that you sell one, you buy another one beneath it, and you have that limited risk in between those two strike prices. So let me know if you have any questions. My contact info is right here in the description, and I'll post that in both of the chats right now as well. My name's Jonathan, and you can email me or call me with any questions about the system. And it looks like we do have about 8 laptops left for the deal today. We allotted 10 of them for today's special promotion. So be sure to get in on that while those are still available. All right, any questions? I'm looking at, thank you, Charles, for being here. Thank you, Jessica. Thank you, James. We're looking at Tesla for high and low points. We talked about that. Awesome. All right. Well, and just so you know, all of this platform here is included with the options mentorship plan. A lot of times people ask me is the rest of this stuff on Benzinga Pro included? And the answer is yes. So normally we would sell the mentorship all by itself on a separate platform, but with this program you get all of these other tools. So you have the scanner, so you can find stocks that are moving each morning as early as 4 a.m. Eastern time, and that goes down to like a 1 minute time frame. So really split second scanner if you're looking for speed there. We also have the best news feed in the business for headline trading. So if you are trading off of headlines, even though Nic really doesn't trade off of headlines, he uses more technical analysis. But if you are looking for the fastest news available, then we do have it. It's one of Benzinga's core competencies. We've been doing this for over a decade. And like, for example, I could say, show me all the mergers and acquisitions for today. And immediately that would give me all of the M&A activity. I can include the press releases, SEC filings, anything else I want in there, and immediately know when there's an acquisition news item or a merger. Kareem, do we need Benzinga Pro account? Could I get the Pro account, then the laptop? So Benzinga Pro is included with the options mentorship. So with this deal today at the 50% off for $16.83, you get Benzinga Pro, the options mentorship with Nic. That includes all his swing trades, his live trading room, his homework on the weekends, and you get the free laptop. That's all included with this system. And then if I click on any one of these and go to the chart, then you'll see how you could do all of your technical analysis right here within Benzinga Pro. Let's see here. Awesome. Anthony, glad you're still here, man. Yeah, I'm glad that you can keep learning with us on here, and we'll be here and ready for you when the timing's right. Jessica, you have some crypto questions. Oh, well, well, that's why we're here, Jessica. We're here to learn. Don't be shy about crypto questions. Nic does trade crypto, so even though today we're talking about stock options, he does have strategies that he uses with Bitcoin, and I know that he's traded Solana and Ethereum. So he is great with crypto questions as well, both on the technical side, and he has theories on the technology side as well. So, and you do get crypto quotes inside of Benzinga Pro. So I could look up like Bitcoin to USD here. Oh, I did BTC too. I don't even know. Let's see, to USD. There we go. So you can see the price action of Bitcoin, Ethereum, Solana, Cardano, a lot of those right here on Benzinga Pro. All right. Looks like, welcome, Ahmed. I see Ahmed is a part of the group now, so glad to have you on board. Kevin, awesome. Glad to have you as a part of the group. Mac, welcome. Fantastic. All right. I'll be looking for you guys in there. Let me know if you have any questions, and I look forward to talking soon. Take care, everyone. Have a great night.